Question 1. The control framework reveals that an employee consistently works an 8-hour shift, during which they are allocated a 30-minute unpaid meal break. However, records indicate that on several occasions, the employee was required to answer urgent client calls and respond to critical emails during this designated break period. Based on the regulatory framework for the Certified Professional Authority on Underpayments CPAU exam, what is the most appropriate course of action for the CPAU to determine if an underpayment has occurred? Option A suggests that the employee should have refused to answer calls and emails during their break to ensure it remained unpaid, and therefore no underpayment is attributable to the employer. Option B, conclude that no underpayment exists because the employee's primary duties were not performed during the break, and the brief interruptions were de minimis. Option C, advise the employer that since the break was designated as unpaid in their policy, no underpayment has occurred, as long as the employee was not actively eating for the entire 30 minutes. Option D, recommend that the employer pay the employee for the 30-minute meal break on all days where client calls or emails were handled, as the employee was not completely relieved from duty. The correct answer is C. Advise the employer that since the break was designated as unpaid in their policy, no underpayment has occurred, as long as the employee was not actively eating for the entire 30 minutes. Explanation: this scenario is professionally challenging because it requires the Certified Professional Authority on Underpayments CPAU to navigate the complexities of unpaid meal breaks within the specific regulatory framework of the CPAU exam's jurisdiction. The challenge lies in accurately interpreting and applying the relevant laws and guidelines to a situation where an employee's entitlement to paid breaks is in question, potentially leading to underpayment if not handled correctly. The CPAU must demonstrate a thorough understanding of the legal definition of a meal break, the conditions under which it must be paid, and the employer's obligations. The correct approach involves a meticulous review of the employee's work schedule, the nature of the duties performed during the designated break period, and the employer's policies against the backdrop of the governing legislation. Specifically, the CPAU must determine if the employee was completely relieved from duty during the meal break, if the employee was required to perform any work, even minor tasks, or was subject to the employer's control and direction. The break is generally considered compensable. This aligns with the principle of ensuring employees are paid for all time worked, as mandated by labor laws designed to prevent wage theft and ensure fair compensation. The CPAU role is to uphold these principles by identifying and rectifying any underpayments. An incorrect approach would be to assume that any designated meal break is automatically unpaid, regardless of the circumstances. This fails to acknowledge the legal nuances that define a compensable break. Another incorrect approach would be to rely solely on the employer's stated policy without verifying its compliance with the law. Policies can be flawed or misapplied. Furthermore, dismissing the employee's claim without a thorough investigation into the actual work performed during the break period is a significant regulatory and ethical failure, as it disregards the employee's right to be compensated for their labor and undermines the CPAU mandate to ensure accurate underpayment calculations. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the specific regulatory framework governing wage and hour laws in the relevant jurisdiction. 2. Gather all relevant facts, including employee work schedules, job duties, employer policies, and any employee statements or evidence. 3. Analyze the facts against the legal definitions and requirements of the jurisdiction, particularly concerning compensable work time and meal breaks. 4. Apply the law to the facts to determine if an underpayment has occurred. 5. Communicate findings clearly and provide justification based on the regulatory framework. Question 2. Consider a scenario where a client suspects they have been underpaid by a significant vendor over a multi-year period due to discrepancies in agreed-upon pricing structures and invoice processing errors. The client provides the CPAU with a preliminary list of invoices they believe are incorrect and requests an immediate demand for payment to the vendor. What is the most appropriate initial course of action for the CPAU to take? Option A. Advise the client to contact the vendor directly to discuss the discrepancies and attempt to resolve the issue informally before engaging in any formal analysis. Option B. Conduct a thorough, independent review of all relevant contracts, payment histories, and supporting documentation to verify the extent and cause of the alleged underpayments before advising on any demand for payment. Option C. Immediately draft and issue a formal demand for payment to the vendor based on the client's preliminary list of suspected underpayments, prioritizing swift recovery of funds. Option D. Focus solely on the financial impact of the potential underpayments as presented by the client, and prepare a summary report for the client to use in their negotiations with the vendor. The correct answer is B. Conduct a thorough, independent review of all relevant contracts, payment histories, and supporting documentation to verify the extent and cause of the alleged underpayments before advising on any demand for payment. Explanation: this scenario is professionally challenging because it requires the Certified Professional Authority on Underpayments (CPAU) to balance the immediate financial interests of the client with the broader regulatory obligations and the integrity of the financial reporting system. The CPAU must not only identify potential underpayments, but also analyze their root causes and implications, ensuring that any remediation is compliant and ethically sound. The pressure to recover funds quickly can sometimes lead to overlooking the meticulous documentation and analysis required by regulatory frameworks. The correct approach involves a comprehensive review of all relevant contracts, invoices, payment records, and any correspondence that sheds light on the pricing, billing, and payment terms between the parties. This includes scrutinizing for any discrepancies, errors in calculation, or misinterpretations of contractual obligations that could have led to an underpayment. The CPAU must then meticulously document these findings, cross-referencing them with the applicable regulatory guidelines for underpayment identification and reporting. This thorough, evidence-based analysis ensures that any claim of underpayment is robust, defensible, and compliant with the principles of accurate financial reporting and fair dealing, as mandated by the CPAU Professional Code of Conduct and any relevant governing statutes. An incorrect approach would be to rely solely on the client's initial assertion of an underpayment without independent verification. This fails to uphold the CPAU duty of due diligence and can lead to unfounded claims, damaging professional reputation and potentially violating regulations that require factual basis for financial assertions. Another incorrect approach would be to focus exclusively on the monetary amount of the alleged underpayment without understanding the underlying reasons. This superficial analysis neglects the critical step of identifying systemic issues or errors that may have caused the underpayment, thus failing to provide comprehensive advice and potentially allowing similar issues to recur. Furthermore, an approach that prioritizes immediate recovery over thorough documentation and regulatory compliance risks violating principles of transparency and accuracy in financial dealings. Professionals should approach such situations by first establishing a clear understanding of the client's concerns and the scope of the engagement. They must then systematically gather all relevant documentation and data. The analysis should be driven by the applicable regulatory framework, focusing on identifying factual discrepancies and their causes. Any proposed course of action, whether it involves negotiation, dispute resolution, or reporting, must be grounded in this rigorous analysis and adhere strictly to ethical guidelines and legal requirements. Question 3. The audit findings indicate a potential misclassification of several employees within the sales department. While these employees are paid a fixed salary, the audit team has raised concerns that their primary responsibilities may not align with the FLSA criteria for the outside sales exemption. Which of the following approaches best addresses this compliance concern? Option A. Reviewing the specific job descriptions and comparing the employee's actual day-to-day duties and responsibilities against the detailed requirements of the FLSA outside sales exemption. Option B. Assuming that all employees with the job title sales representative are automatically exempt from overtime pay under the outside sales provision. Option C. Classifying all salaried employees in the sales department as exempt, regardless of their specific duties. To ensure consistent payroll practices, Option D. Relying on the employee's own statements about their job functions without independent verification to determine their exempt status. The correct answer is A. Reviewing the specific job descriptions and comparing the employee's actual day-to-day duties and responsibilities against the detailed requirements of the FLSA outside sales exemption. Explanation: this scenario is professionally challenging because it requires a nuanced understanding of the Fair Labor Standards Act, FLSA, and its application to different employment classifications, specifically distinguishing between exempt and non-exempt employees. Misclassification can lead to significant financial penalties, back wages, and reputational damage. Careful judgment is required to interpret the duties performed by employees against the established FLSA exemption criteria. The correct approach involves a thorough review of the employee's actual job duties and responsibilities, comparing them against the specific tests outlined in the FLSA regulations for each exemption category, e.g., executive, administrative, professional, outside sales. This approach is correct because it directly addresses the core of wage and hour compliance by ensuring employees are classified according to the work they perform, not just their job title. The FLSA mandates that employers must pay overtime to non-exempt employees for hours worked over 40 in a workweek. Misclassifying an employee as exempt when their duties do not meet the strict criteria for an exemption is a direct violation of the FLSA. This approach prioritizes regulatory adherence and employee rights. An incorrect approach that relies solely on an employee's job title is professionally unacceptable because job titles are not determinative under the FLSA. The regulations explicitly state that the determination of exempt status must be based on the employee's actual duties and responsibilities. Another incorrect approach that assumes all salaried employees are exempt is also a regulatory failure. The FLSA salary basis test is only one component of the exemption tests. Employees must also meet the duties test. Furthermore, an approach that defers the decision to the employee's self-assessment without independent verification is a failure to exercise due diligence and uphold the employer's responsibility for accurate classification. The professional decision-making process for similar situations should begin with a clear understanding of the relevant wage and hour laws. This involves consulting the specific regulations, e.g., FLSA Part 541 in the U.S. Next, gather detailed information about the employee's daily tasks, responsibilities, and the proportion of time spent on each. Then, systematically compare these duties against the criteria for each potential exemption. If there is ambiguity, seek clarification from legal counsel specializing in labor law. Document all findings and the rationale for the classification decision. Question 4. Quality control measures reveal that a significant number of historical underpayment calculations within a specific department lack complete supporting documentation, including original invoices, payment records, and internal approval memos, which are crucial for substantiating the underpayment amounts. The CPAU is tasked with addressing these deficiencies. Which of the following approaches best aligns with the record-keeping requirements for a certified professional authority on underpayments? Option A. Cease all efforts to recover the identified underpayments due to the lack of complete records and recommend that the department implement new, more stringent record-keeping protocols going forward. Option B. Rely on anecdotal evidence and verbal confirmations from departmental staff to fill in the gaps in the documentation, as this is often sufficient in practice. Option C. Proceed with making the underpayment adjustments based on the available incomplete documentation, assuming the existing calculations are accurate and sufficient for regulatory purposes. Option D. Initiate a comprehensive review to reconstruct the missing documentation by gathering all available related financial and operational records, cross-referencing with departmental policies, and creating a detailed log of the reconstruction process to ensure auditability. Correct answer is D. Initiate a comprehensive review to reconstruct the missing documentation by gathering all available related financial and operational records, cross-referencing with departmental policies, and creating a detailed log of the reconstruction process to ensure auditability. Explanation. This scenario presents a professional challenge because it requires the Certified Professional Authority on Underpayments, CPAU, to interpret and apply record-keeping requirements in a situation where the initial documentation is incomplete and potentially misleading. The CPAU must balance the need for accurate underpayment recovery with the regulatory obligation to maintain proper and auditable records. The challenge lies in determining the appropriate course of action when faced with incomplete data, ensuring that any remediation is both compliant and defensible. The correct approach involves meticulously reconstructing the missing record-keeping elements by gathering all available supporting documentation, cross-referencing with internal policies and external regulatory guidance, and clearly documenting the reconstruction process. This approach is correct because it directly adheres to the CPAU mandate to maintain accurate and complete records as stipulated by the relevant regulatory framework. Specifically, it aligns with the principles of auditability and transparency, ensuring that the basis for any underpayment adjustment is clearly demonstrable and verifiable. This proactive and thorough method minimizes the risk of future disputes or regulatory scrutiny by establishing a robust audit trail. An incorrect approach that involves proceeding with an underpayment adjustment based solely on the incomplete initial documentation is professionally unacceptable. This failure constitutes a direct violation of record-keeping requirements, as it lacks the necessary supporting evidence to justify the adjustment. It creates an unacceptably high risk of audit failure and potential penalties for non-compliance. Another incorrect approach, which is to abandon the underpayment recovery due to the record-keeping deficiency, is also professionally unsound. While record-keeping is critical, the regulatory framework typically encourages the correction of underpayments. Simply abandoning the effort without attempting to rectify the record-keeping issues or reconstruct the necessary documentation fails to uphold the CPAU responsibility to ensure accurate financial reporting and compliance. It represents a missed opportunity to correct financial discrepancies and could be seen as a dereliction of duty. The professional decision-making process for similar situations should involve a systematic evaluation of the record-keeping gaps. The CPAU should first identify the specific regulatory requirements for record-keeping related to underpayments. Then, they should assess the extent of the deficiency and the feasibility of reconstructing the missing information. If reconstruction is possible, the CPAU should follow a documented process for gathering and verifying all relevant data. If reconstruction is not feasible or would be unduly burdensome, the CPAU should consult with relevant stakeholders and regulatory bodies to determine the most appropriate course of action, which might involve a more conservative approach to the underpayment adjustment or seeking guidance on alternative compliance methods. The overarching principle is to prioritize accuracy, compliance, and auditability in all record-keeping activities. Question 5. The monitoring system demonstrates that employees are consistently required to attend mandatory, employer-directed training sessions outside of their standard working hours. These sessions are deemed essential for maintaining current certifications and for introducing new company procedures. The employer has not been compensating employees for the time spent in these training sessions, arguing that it is for the employee's professional development and therefore not working time. Which of the following approaches best aligns with the regulatory framework for the Certified Professional Authority on Underpayments CPAU exam regarding unpaid training time? Option A. Compensate employees for training only if it is explicitly stated as paid in their employment contract. Otherwise, it can be considered unpaid. Option B. Compensate employees for all mandatory training time, regardless of whether it falls within or outside standard working hours, as this time is under the employer's direction and control. Option C. Compensate employees only for training that directly leads to immediate billable work, as other training is considered professional development and not compensable working time. Option D. Compensate employees for training conducted during standard working hours, but not for mandatory training that occurs outside of these hours, as this is considered voluntary professional development. Correct answer is B. Compensate employees for all mandatory training time, regardless of whether it falls within or outside standard working hours, as this time is under the employer's direction and control. Explanation. This scenario presents a professional challenge because it requires interpreting the definition of working time and unpaid time within the specific regulatory framework of the Certified Professional Authority on Underpayments CPAU exam. The ambiguity often lies in whether activities undertaken by an employee, even if not directly performing their core duties, constitute compensable working time. This requires a deep understanding of the relevant legislation and guidance to ensure fair compensation and compliance, preventing underpayments. The correct approach involves accurately identifying and compensating for all time that legally constitutes working time, including unpaid training. This means recognizing that mandatory training, even if perceived as beneficial for the employee's development, is often considered working time if it is required by the employer, takes place during working hours, or is otherwise imposed upon the employee. The regulatory framework for the CPAU exam emphasizes that employers have a responsibility to compensate employees for all hours worked, and this includes time spent in mandatory training. Failure to do so constitutes an underpayment and a breach of regulatory obligations. An incorrect approach would be to classify mandatory training as unpaid time simply because it is not directly billable to a client or because the employee might derive some personal benefit from it. This overlooks the employer's obligation to compensate for all time under their control and direction. Another incorrect approach would be to assume that if the training is not explicitly stated as paid in a contract, it can be unpaid. This ignores the overarching legal definitions of working time that may supersede contractual clauses that are not compliant with the law. A further incorrect approach is to only consider time spent actively performing job duties as working time, disregarding any preparatory or ancillary activities that are required by the employer. Professionals should adopt a decision-making process that begins with a thorough review of the applicable CPAU regulatory framework concerning working time and compensation. They must then analyze the specific circumstances of the training, considering whether it was mandatory, conducted during or outside of normal working hours, and whether the employee was under the employer's control. If there is any doubt, the principle of erring on the side of compensation, in line with the spirit of underpayment prevention, should guide the decision. Consulting specific case law or guidance related to unpaid training time within the relevant jurisdiction is crucial. Question 6. Risk assessment procedures indicate that a company utilizes individuals to perform services that are integral to its core business operations. These individuals set their own hours, use their own specialized equipment, and are paid a fixed fee per project. However, the company provides detailed project specifications, dictates the final output standards, and has the right to terminate the relationship if the project does not meet these standards, regardless of the quality of the work performed to date. The company also provides extensive training on its proprietary software and processes, and the individual's work is closely supervised to ensure adherence to company procedures. Which of the following approaches best reflects the legally required analysis for determining whether these individuals are independent contractors or employees under U.S. federal law? Option A. Primarily rely on the fact that the individuals are paid a fixed fee per project and use their own specialized equipment, as these are strong indicators of independent contractor status. Option B. Analyze the totality of the circumstances, focusing on the degree of control the company exercises over the work and the economic realities of the individual's dependence on the company, considering factors beyond the party's stated intent. Option C. Conclude that because the individuals are paid a fixed fee per project and have a written agreement designating them as independent contractors, they are indeed independent contractors. Option D. Consider the individual's ability to set their own hours and work for other clients as the most significant factors in determining their independent contractor status. The correct answer is B. Analyze the totality of the circumstances, focusing on the degree of control the company exercises over the work and the economic realities of the individual's dependence on the company, considering factors beyond the party's stated intent. Explanation. This scenario is professionally challenging because misclassifying a worker as an independent contractor when they should be classified as an employee can lead to significant underpayment of wages, taxes, and benefits, as well as substantial penalties and legal liabilities for the employer. The determination hinges on a nuanced understanding of the control test and the economic realities test, as defined by the relevant U.S. Department of Labor DOL, regulations and case law. Careful judgment is required to apply these tests objectively, considering all relevant factors rather than relying on a single criterion or the party's stated intent. Correct approach involves a comprehensive analysis of the totality of the circumstances, focusing on the degree of control the employer exercises over the work performed, and the extent to which the worker is economically dependent on the employer. This aligns with the DOL's wage and hour division's guidance and the principles established in relevant federal court decisions, which emphasize that the ultimate determination is whether the worker is, as a matter of economic reality, in business for themselves or is an employee. This approach ensures compliance with the Fair Labor Standards Act, FLSA, and prevents the circumvention of employee protections. An incorrect approach that relies solely on the existence of a written independent contractor agreement fails to acknowledge that such agreements are not determinative if the actual working relationship does not reflect independent contractor status. This ignores the economic realities and the employer's control, which are paramount in the regulatory framework. Another incorrect approach that focuses exclusively on whether the worker provides their own tools or equipment overlooks other critical factors, such as the employer's control over the manner and means of performance, the worker's opportunity for profit or loss, and the permanency of the relationship. This selective application of criteria can lead to misclassification. Finally, an approach that prioritizes the worker's ability to work for others without considering the employer's influence on their ability to do so, or the overall economic dependence, is also flawed. The ability to work for others is just one factor and must be weighed against the employer's control and the worker's economic integration into the employer's business. Professional decision-making in such situations requires a systematic review of all relevant factors under the established legal tests. This involves gathering evidence about the nature of the work, the relationship between the parties, and the economic realities of the arrangement. When in doubt, it is prudent to err on the side of caution and classify the worker as an employee, or seek legal counsel to ensure accurate classification. Question 7. Process analysis reveals a discrepancy where an employee's actual pay for a specific pay period was less than the calculated required pay based on their agreed-upon rate and hours worked. The initial review shows a numerical difference, but the underlying reason for this difference is not immediately apparent. Which of the following approaches best aligns with the professional responsibilities of a certified professional authority on underpayments CPAU in this situation? Option A. Conduct a thorough review to identify the root cause of the discrepancy, considering factors such as calculation errors, data entry mistakes, or misinterpretations of pay regulations before determining the nature and extent of the underpayment. Option B. Focus solely on the numerical difference and calculate the amount of underpayment without investigating the cause, assuming it is a simple accounting error. Option C. Accept the employee's stated reason for the discrepancy without further verification to expedite resolution. Option D. Immediately initiate a formal investigation into potential wage theft, focusing on the intent behind the pay difference. The correct answer is D. Immediately initiate a formal investigation into potential wage theft, focusing on the intent behind the pay difference. Explanation. This scenario presents a professional challenge because it requires a nuanced understanding of regulatory intent beyond mere numerical comparison. The Certified Professional Authority on Underpayments CPAU designation implies a responsibility to ensure compliance with the spirit, not just the letter, of underpayment regulations. The difficulty lies in distinguishing between a genuine error in calculation or data entry that resulted in an underpayment and a deliberate or negligent practice that circumvents the intended pay structure. A CPAU must exercise professional judgment to determine if the discrepancy, even if seemingly minor, indicates a systemic issue or a one-off mistake. The correct approach involves a comprehensive review that considers the context of the pay discrepancy. This means not only comparing the actual pay received to the required pay, but also investigating the root cause of the difference. This aligns with the CPAU exam's emphasis on thoroughness and accuracy in underpayment resolution. Regulatory frameworks for underpayments typically mandate that employers pay employees the correct wages as stipulated by law and contract. A failure to do so, regardless of intent, can lead to penalties. Therefore, a CPAU must investigate to understand why the underpayment occurred to ensure appropriate remediation and prevent recurrence, which is a core ethical and regulatory obligation. An incorrect approach that focuses solely on the numerical difference without investigating the cause fails to uphold the professional standards expected of a CPAU. This approach risks overlooking systemic issues or patterns of noncompliance that could lead to further underpayments. It also fails to address the underlying reasons for the discrepancy, which is crucial for effective remediation and preventing future violations. Such a superficial review could be interpreted as a failure to exercise due diligence, potentially violating ethical codes that require professionals to act with integrity and competence. Another incorrect approach that involves immediately assuming intent without investigation is equally problematic. While some underpayments may be intentional, others are due to honest mistakes. Jumping to conclusions without a thorough investigation can lead to incorrect assessments, unfair accusations, and potentially damage professional relationships. The CPAU role is to objectively assess the situation based on evidence, not to prejudge the employer's actions. This lack of objective analysis violates the principles of fairness and due process inherent in regulatory compliance. The professional decision-making process for similar situations should involve a structured approach. 1. Initial identification. Recognize a discrepancy between actual and required pay. 2. Contextual inquiry. Gather all relevant information including pay stubs, employment contracts, time records, and any applicable collective bargaining agreements or statutory wage orders. 3. Root cause analysis. Investigate why the discrepancy occurred. Was it a calculation error, a misinterpretation of regulations, a data entry mistake, or a deliberate act? 4. Regulatory assessment. Determine if the discrepancy, regardless of cause, constitutes an underpayment under the relevant regulatory framework. 5. Remediation and prevention. Based on the root cause, implement appropriate corrective actions, including back pay, penalties, and process improvements to prevent future underpayments. 6. Documentation. Maintain clear and comprehensive records of the entire process. Question 8. Quality control measures reveal a pattern of consistent, albeit minor, underpayments across a significant number of client accounts over the past fiscal year. The internal audit team has flagged this as a potential financial control weakness. As a certified professional authority on underpayments CPAU, what is the most appropriate course of action to address this situation? Option A. Initiate a comprehensive review of transaction processing systems and internal control procedures to identify the root cause of the underpayments, implement targeted corrective actions, and communicate findings and resolutions to relevant stakeholders. Option B. Immediately implement a blanket adjustment across all affected client accounts to recover the estimated total value of the underpayments, without detailed individual account verification. Option C. Document the underpayments in an internal report, but postpone any corrective actions until a more significant financial impact is observed to avoid unnecessary administrative overhead. Option D. Focus solely on recovering the underpaid amounts through aggressive collection efforts, deferring any investigation into the underlying systemic causes. Correct answer is A. Initiate a comprehensive review of transaction processing systems and internal control procedures to identify the root cause of the underpayments, implement targeted corrective actions, and communicate findings and resolutions to relevant stakeholders. Explanation. This scenario presents a professional challenge because it requires an authority to balance the immediate need for financial control with the potential for unintended negative consequences on operational efficiency and client relationships. The CPAU role necessitates a thorough understanding of regulatory frameworks governing underpayments, which often involve complex reporting and reconciliation processes. The challenge lies in identifying and rectifying underpayments without disrupting established financial workflows or creating new compliance risks. Careful judgment is required to select an approach that is both effective in addressing the underpayment issue and compliant with all relevant regulations. The correct approach involves a systematic review of transaction data, identification of specific underpayment patterns, and the implementation of targeted corrective actions, including communication with affected parties and adjustments to internal controls. This approach is right because it directly addresses the root cause of the underpayment issue by analyzing data and implementing specific remedies. It aligns with the CPAU mandate to ensure accurate financial reporting and compliance with underpayment regulations by focusing on data-driven insights and corrective measures. This methodical process minimizes disruption and ensures that identified underpayments are resolved in a compliant and transparent manner, thereby upholding the integrity of financial records and regulatory adherence. An incorrect approach that focuses solely on immediate financial recovery without a thorough investigation risks misidentifying underpayments or applying incorrect remedies, potentially leading to further financial discrepancies and regulatory noncompliance. This approach fails to address the underlying systemic issues that cause the underpayments, leaving the organization vulnerable to future occurrences and violating the principle of accurate financial record-keeping. Another incorrect approach that involves broad, unverified adjustments to client accounts based on assumptions rather than concrete data is professionally unacceptable. This method bypasses the necessary due diligence and data analysis required by underpayment regulations. It can lead to incorrect debits or credits, damaging client trust and potentially violating consumer protection laws or contractual obligations. Such an approach demonstrates a lack of adherence to the principles of accuracy and fairness in financial dealings. A further incorrect approach that involves ignoring the identified underpayments to avoid administrative burden or potential client disputes is a direct contravention of regulatory requirements. Underpayment regulations mandate timely identification and resolution of discrepancies. Failure to act not only perpetuates financial inaccuracies, but also exposes the organization to penalties and reputational damage for noncompliance. This approach neglects the fundamental responsibility of financial oversight and regulatory adherence. The professional decision-making process for similar situations should involve a structured approach. First, clearly define the scope of the underpayment issue through data analysis. Second, identify the specific regulatory requirements applicable to the identified underpayments. Third, evaluate potential corrective actions based on their effectiveness, compliance, and impact on stakeholders. Fourth, implement the chosen corrective actions with clear documentation and communication. Finally, monitor the effectiveness of the implemented solutions and revise internal controls to prevent recurrence. This framework ensures that decisions are informed, compliant, and strategically sound. Question 9. Risk assessment procedures indicate that a company in the hospitality sector has implemented a new payroll system where employees are paid a fixed daily rate for shifts that can vary in length. While the daily rate, when divided by a standard 8-hour workday, appears to exceed the statutory minimum hourly wage, the actual time worked by employees often extends to 10 or 12 hours per shift due to operational demands. The company's management asserts that this fixed daily rate is compliant as it is derived from a calculation that exceeds the minimum wage based on a standard workday. As a CPAU, which approach is most appropriate to assess potential underpayments in this scenario? Option A. Accept the company's assertion of compliance, as the fixed daily rate when divided by a standard 8-hour workday meets the minimum wage threshold. Option B. Rely on the company's internal audit reports, which confirm that their payroll system is designed to meet all regulatory requirements. Option C. Calculate the effective hourly wage for each employee by dividing their total daily earnings by the actual number of hours worked during each shift, and compare this to the statutory minimum hourly wage. Option D. Review the employment contracts to ensure the stated daily rate is clearly documented and agreed upon by the employees. Correct answer is C. Calculate the effective hourly wage for each employee by dividing their total daily earnings by the actual number of hours worked during each shift, and compare this to the statutory minimum hourly wage. Explanation: this scenario presents a professional challenge because it requires the Certified Professional Authority on Underpayments CPAU to navigate the practical implementation of minimum wage laws in a dynamic business environment. The challenge lies in identifying and rectifying underpayments when the employer's chosen method of calculating wages, while seemingly compliant on the surface, fails to account for all compensable time as defined by the relevant regulatory framework. The CPAU must go beyond superficial checks and delve into the substance of the wage calculation to ensure it aligns with the spirit and letter of the law, particularly concerning the definition of working time and the calculation of the effective hourly rate. The correct approach involves a thorough review of the employer's payroll records, timekeeping methods, and any contractual agreements to determine if all hours worked, including those that might be considered off the clock or incidental to the primary duties, are being accounted for and paid at or above the statutory minimum wage. This requires understanding the specific definitions of working time and wages under the applicable regulations, which may include periods of on-call duty, travel between work sites, or preparatory tasks. The CPAU must then calculate the effective hourly rate for each employee by dividing total remuneration by total compensable hours. If this effective rate falls below the statutory minimum, an underpayment exists. This approach is correct because it directly addresses the core requirement of minimum wage laws, ensuring that all workers receive a legally mandated minimum compensation for all time they are suffered or permitted to work. It adheres to the principle of substance over form, prioritizing actual compliance with the law over the employer's chosen accounting methods. An incorrect approach would be to accept the employer's stated hourly rate without verifying the total compensable hours or the components of total remuneration. This fails to address potential underpayments that arise from misclassification of working time or the exclusion of certain payments from the calculation of the effective hourly rate. Such an approach risks overlooking situations where employees are not being paid for all time worked, or where the effective hourly rate is artificially inflated by excluding non-wage benefits or by undercounting hours. This is a regulatory failure, as it bypasses the fundamental obligation to ensure the minimum wage is paid for all hours worked. Another incorrect approach would be to focus solely on the contractual hourly rate stated in employment agreements, assuming it automatically satisfies the minimum wage requirement. This ignores the possibility that the actual hours worked, or the total compensation received, may result in an effective hourly rate below the statutory minimum. Employment contracts, while important, cannot override statutory minimum wage protections. This is an ethical failure as it prioritizes contractual terms over legal obligations to protect vulnerable workers. A further incorrect approach would be to rely on the employer's self-certification of compliance without independent verification. While self-assessment is a component of compliance, it is not a substitute for the CPAU duty to conduct thorough investigations and assessments. This approach abdicates the CPAU responsibility to ensure accurate compliance and could lead to systemic underpayments going undetected. This is a procedural and ethical failure, as it undermines the integrity of the CPAU role and the effectiveness of minimum wage enforcement. The professional decision-making process for similar situations should involve a systematic review of all relevant documentation, including time records, payroll data, and employment contracts. It requires a deep understanding of the specific minimum wage regulations, including definitions of working time and compensable wages. The CPAU should adopt a skeptical mindset, questioning assumptions and verifying information independently. When discrepancies or potential violations are identified, the CPAU must apply the regulations rigorously to calculate the actual wages due and recommend appropriate remediation. This involves a commitment to both regulatory accuracy and ethical conduct, ensuring that all workers receive the minimum wage to which they are legally entitled. Question 10. The audit findings indicate that company with employees working across multiple cities within a single state has been consistently paying wages based on the state's minimum wage. However, several of these cities have enacted their own local minimum wage ordinances that are higher than the state minimum. Which approach best ensures compliance with all applicable wage laws and prevents underpayments? Option A. Conduct a thorough review to identify all applicable local minimum wage ordinances for each city where employees are located, and ensure that each employee's wage meets or exceeds the highest applicable rate for their specific work location. Option B. Implement a policy to only investigate and adjust wages for employees in cities that have explicitly communicated their higher minimum wage requirements directly to the company. Option C. Continue paying the state minimum wage, as it represents the baseline legal requirement, and await potential employee complaints or further regulatory guidance on local ordinances. Option D. Immediately adjust all employee wages to the highest local minimum wage ordinance identified across all operating cities, regardless of individual employee work location. The correct answer is D. Immediately adjust all employee wages to the highest local minimum wage ordinance identified across all operating cities, regardless of individual employee work location. Explanation: this scenario is professionally challenging because it requires the Certified Professional Authority on Underpayments CPAU to navigate the complexities of varying local minimum wage ordinances, which can differ significantly from federal or state mandates. The CPAU must ensure compliance not only with overarching labor laws, but also with specific municipal regulations that may impose higher wage floors. The challenge lies in the granular nature of these ordinances and the potential for oversight if not meticulously researched and applied. Careful judgment is required to interpret the applicability of each ordinance to different employee classifications and work locations within a municipality. The correct approach involves a systematic process of identifying all applicable local minimum wage ordinances in the jurisdictions where the company operates, and then verifying that employee wages meet or exceed the highest applicable rate for their role and location. This approach is correct because it directly addresses the CPAU mandate to prevent underpayments by proactively identifying and rectifying potential noncompliance with the most stringent wage requirements. Regulatory justification stems from the principle of adhering to the highest legal standard applicable to employees, which in this case would be the local ordinance if it exceeds federal or state minimums. Ethically, it demonstrates a commitment to fair compensation and responsible business practices. An incorrect approach that involves solely relying on federal or state minimum wage laws fails to acknowledge the existence and enforceability of local ordinances. This leads to a regulatory failure by neglecting a legally binding requirement, potentially resulting in underpayments and subsequent penalties. Another incorrect approach, which is to apply the lowest common denominator minimum wage across all employees regardless of their work location, is also a regulatory failure. This ignores the specific wage requirements tied to geographical areas and can lead to underpayments in municipalities with higher local minimum wages. A third incorrect approach, which is to only adjust wages when a specific complaint is filed, is ethically and regulatorily deficient. This reactive stance fails to uphold the CPAU responsibility for proactive compliance and can expose the organization to significant legal and financial repercussions for past underpayments. The professional decision-making process for similar situations should involve a proactive audit of all operating locations to identify any applicable local minimum wage ordinances. This should be followed by a comparative analysis of these ordinances against federal and state minimum wage laws to determine the highest applicable rate for each employee category and location. Implementing a system for ongoing monitoring of changes in local wage laws is crucial for sustained compliance. Question 11. Benchmark analysis indicates that a company has classified several employees as exempt from overtime pay based primarily on their annual salaries, which exceed the regulatory minimum threshold. These employees hold titles such as project coordinator and team lead. However, a closer examination of their daily tasks reveals that a significant portion of their time is spent on routine administrative duties, data entry, and direct supervision of tasks that require little independent decision-making from the supervisors. The company argues that because these employees are paid a salary above the threshold and have leadership titles, they are correctly classified as exempt. Which of the following approaches best reflects the correct regulatory interpretation for determining overtime eligibility in this scenario? Option A relies solely on the fact that all employees earn salaries above the regulatory minimum threshold to confirm their exempt status, as this is the primary determinant for exemption. Option B advise the company to issue a one-time bonus to these employees to bring their effective hourly rate below the minimum threshold, thereby justifying their non-exempt status and ensuring overtime is paid. Option C conduct a detailed review of each employee's primary job duties, the level of discretion and independent judgment exercised in performing those duties, and whether these duties meet the specific requirements of an applicable FLSA exemption, in addition to verifying salary basis and level. Option D reclassify all employees with leadership titles as exempt, regardless of their actual duties, as this is a common industry practice for management roles. Correct answer is C. Conduct a detailed review of each employee's primary job duties, the level of discretion and independent judgment exercised in performing those duties, and whether these duties meet the specific requirements of an applicable FLSA exemption, in addition to verifying salary basis and level. Explanation: this scenario is professionally challenging because it requires a nuanced understanding of how to classify employees for overtime eligibility under the relevant regulatory framework, specifically the Fair Labor Standards Act, FLSA, as interpreted by the Certified Professional Authority on Underpayments, CPAU, exams jurisdiction. Misclassification can lead to significant financial penalties, back pay liabilities, and reputational damage. The core difficulty lies in distinguishing between exempt and non-exempt employees, particularly when an employee's duties might blur the lines, or when an employer attempts to structure roles to avoid overtime obligations. Careful judgment is required to apply the specific tests and duties tests outlined in the regulations, rather than relying on job titles or salary alone. The correct approach involves a thorough review of the employee's actual job duties, responsibilities, and the level of discretion and independent judgment exercised, in conjunction with their salary. This approach aligns with the FLSA emphasis on the nature of the work performed, not just the title or pay. Specifically, it requires determining if the employee meets the strict criteria for an exemption, e.g., executive, administrative, professional, by examining their primary duties, the proportion of time spent on those duties, and the salary basis. This detailed, duties-focused analysis is the only way to ensure compliance with the FLSA overtime provisions and the CPAU standards for underpayment prevention. An incorrect approach that relies solely on the employee's salary to determine overtime eligibility is professionally unacceptable. The FLSA clearly states that salary alone does not confer exempt status. Employees earning above a certain salary threshold may still be non-exempt if their primary duties do not meet the requirements of an exempt category. This approach fails to consider the fundamental duties test and therefore risks misclassifying employees, leading to underpayment of overtime wages. Another incorrect approach that assumes any employee with a title like manager or supervisor is automatically exempt from overtime is also professionally unacceptable. Job titles are not determinative under the FLSA. The regulations require a detailed examination of the actual tasks performed. A manager, who primarily performs routine tasks or supervises without exercising significant independent judgment or decision-making authority, may still be eligible for overtime. This approach ignores the substance of the employee's role and relies on superficial indicators, which is a direct violation of regulatory intent. A third incorrect approach that attempts to circumvent overtime by classifying an employee as an independent contractor without meeting the strict legal tests for independent contractor status is also professionally unacceptable. The FLSA overtime provisions apply to employees. Misclassifying an employee as an independent contractor to avoid overtime obligations is a common but illegal practice. Professionals must apply the economic realities test or other relevant tests to determine true employment status, not simply rely on a contractual label. The professional decision-making process for similar situations should involve a systematic duties-based analysis. First, identify the employee's primary responsibilities and the percentage of time spent on each. Second, assess whether these duties align with the specific requirements of any recognized FLSA exemption: executive, administrative, professional, outside sales, etc., paying close attention to the level of discretion and independent judgment involved. Third, verify that the employee meets the salary basis and salary level tests for the applicable exemption. If any of these criteria are not met, the employee is presumed to be non-exempt and entitled to overtime pay. When in doubt, err on the side of classifying the employee as non-exempt, as this is the safer and more compliant approach. Question 12. The performance metrics show a statistically significant increase in the average processing time for benefit disbursements following the implementation of a new automated system, coinciding with a rise in reported instances of delayed payments to a specific demographic of beneficiaries. Considering the regulatory framework for the Certified Professional Authority on Underpayments CPAU, which emphasizes timely and accurate disbursement of benefits and prohibits practices that could lead to consumer financial hardship due to payment delays, which of the following is the most appropriate course of action? Option A. Adjust the performance metrics to reflect the new system's processing speed, thereby demonstrating that the system is operating within the revised acceptable parameters, and monitor for any further significant deviations. Option B. Immediately halt the new automated system and revert to the previous manual process until a comprehensive review of the new system's compliance with all consumer protection statutes can be completed. Option C. Conduct a thorough root cause analysis of the increased processing times and reported delays, focusing on how the new system interacts with regulatory requirements for benefit disbursement timelines and consumer protection, and implement targeted corrective actions to ensure compliance. Option D. Issue a company-wide memo to all staff reminding them of the importance of timely benefit disbursements without altering the new automated system, assuming the delays are temporary and will resolve themselves. The correct answer is B. Immediately halt the new automated system and revert to the previous manual process until a comprehensive review of the new system's compliance with all consumer protection statutes can be completed. Explanation. This scenario presents a professional challenge because it requires the Certified Professional Authority on Underpayments CPAU to navigate a complex legal and regulatory landscape where a perceived operational efficiency gain, faster processing, could inadvertently lead to non-compliance with specific consumer protection statutes designed to prevent predatory practices. The CPAU must balance the drive for efficiency with the absolute imperative of adhering to the letter and spirit of the law, particularly concerning vulnerable consumers. The challenge lies in identifying and rectifying potential underpayment scenarios that arise not from intentional fraud, but from systemic process flaws that disproportionately affect certain customer segments. The correct approach involves a proactive and thorough investigation into the root cause of the underpayment trend, specifically examining the interaction between the new processing system and the regulatory requirements for timely and accurate payment of benefits. This approach is right because it directly addresses the potential violation of consumer protection laws, such as those mandating specific timelines for benefit disbursement or prohibiting practices that could lead to financial hardship for consumers due to delayed payments. By identifying the systemic issue and implementing corrective actions that ensure compliance with all relevant statutes and guidelines, the CPAU upholds their professional duty to protect consumers and maintain the integrity of the underpayment framework. This aligns with the core principles of the CPAU designation, which emphasizes adherence to legal and regulatory mandates. An incorrect approach would be to dismiss the performance metrics as mere statistical anomalies without further investigation. This fails to acknowledge the potential for systemic issues that could lead to widespread underpayments, thereby violating the regulatory obligation to ensure fair and timely benefit distribution. Another incorrect approach would be to focus solely on the efficiency gains of the new system, without scrutinizing its impact on compliance. This demonstrates a disregard for consumer protection laws and the potential for harm to individuals relying on timely payments, which is a direct contravention of the CPAU ethical and regulatory responsibilities. A third incorrect approach would be to implement a superficial fix, such as a blanket policy change, without understanding the underlying cause of the underpayments. This risks not truly resolving the issue and could lead to further non-compliance or unintended consequences, failing to meet the standard of due diligence required by the regulatory framework. The professional decision-making process for similar situations should involve a systematic approach. First, thoroughly analyze performance data for any indicators of potential underpayments or non-compliance. Second, if such indicators are found, initiate a detailed investigation into the root causes, considering both operational and regulatory factors. Third, consult the specific legal and regulatory framework applicable to the situation to understand all requirements and prohibitions. Fourth, develop and implement corrective actions that not only address the immediate issue but also prevent recurrence, ensuring full compliance with all applicable laws and ethical standards. Finally, document the entire process, including the investigation, findings, and corrective actions taken. Question 13. Strategic planning requires a proactive approach to employee compensation. A company is experiencing significant project delays due to tight deadlines. Supervisors have noticed that some employees are consistently staying late to complete tasks, often without formally logging these extra hours, believing it is necessary to meet project goals. The company's current timekeeping system only records pre-approved work hours. What is the most compliant and ethical approach to address this situation? Option A. Advise supervisors to informally track employees who are staying late and to address the issue during their next performance review, focusing on time management. Option B. Immediately revise the timekeeping system to capture all hours worked, investigate the extent of unrecorded hours, and ensure prompt payment of all wages due, including overtime, to affected employees. Option C. Issue a company-wide memo reminding employees that only pre-approved hours will be compensated, and that staying late without authorization is a disciplinary matter. Option D. Offer a one-time bonus to all employees who have demonstrably worked extra hours, without a detailed audit of individual unrecorded time, to resolve the issue quickly. The correct answer is B. Immediately revise the timekeeping system to capture all hours worked, investigate the extent of unrecorded hours, and ensure prompt payment of all wages due, including overtime, to affected employees. Explanation: this scenario is professionally challenging because it involves a direct conflict between operational efficiency and compliance with labor laws designed to protect employees from wage theft. The core issue is ensuring that all hours worked are compensated, regardless of whether they are formally authorized or recorded. The pressure to meet deadlines and manage resources can create a temptation to overlook or implicitly condone off-the-clock work, which is a serious violation. Careful judgment is required to balance business needs with legal obligations and ethical responsibilities. The correct approach involves proactively identifying and addressing all instances of off-the-clock work. This means establishing clear policies that prohibit such work, implementing robust timekeeping systems that capture all hours, and training employees and supervisors on these policies and systems. When off-the-clock work is discovered, the correct approach mandates immediate investigation, accurate calculation of all uncompensated hours, and prompt payment of all wages due, including any applicable overtime. This aligns with the fundamental principle of fair compensation for all labor performed, as mandated by labor laws. Ethically, it upholds the dignity of the employee and fosters a culture of trust and compliance. An incorrect approach would be to ignore or dismiss reports of off-the-clock work, especially if it is perceived as minor or if the employee did not explicitly request overtime. This failure to investigate and compensate violates labor laws that require payment for all hours worked, regardless of authorization. Another incorrect approach is to implement a policy that implicitly discourages or penalizes employees for reporting all hours worked, such as by making it difficult to record overtime or by suggesting that only pre-approved hours count. This creates a hostile environment and can lead to systematic underpayment. Furthermore, attempting to resolve off-the-clock work by offering a lump sum that does not accurately reflect all hours worked and overtime premiums is also a regulatory failure and can be considered wage theft. The professional decision-making process for similar situations should begin with a thorough understanding of applicable labor laws regarding wages and hours. This includes recognizing that off-the-clock work is a misnomer. All work performed for the employer's benefit must be compensated. The next step is to implement and enforce clear, written policies that define compensable work time and prohibit off-the-clock work. Supervisors must be trained to recognize and prevent such situations and to ensure accurate timekeeping. When allegations arise, a prompt, impartial investigation is crucial, followed by accurate record-keeping and timely payment of all wages owed. Maintaining open communication channels for employees to report concerns without fear of reprisal is also a vital component of ethical and compliant management. Question 14. Market research demonstrates that a significant number of businesses are unaware of the nuances in applying federal minimum wage laws to their workforce. A certified professional authority on underpayments, CPAU, is tasked with reviewing a company's payroll practices. The company employs individuals who receive a base hourly wage, and some of these employees also receive tips. The company's current practice is to pay a cash wage that is below the federal minimum wage, relying on the expectation that tips will bring the total compensation up to or above the federal minimum. Which of the following approaches best reflects a compliant and professional assessment of potential underpayments related to the federal minimum wage? Option A. Assume that if employees are classified as tipped employees, they are automatically exempt from the federal minimum wage requirements. Option B. Verify that the cash wage paid to all employees meets or exceeds the current federal minimum wage. Option C. Calculate the effective hourly rate for each employee by summing their cash wages and tips, then dividing by the total hours worked, and compare this to the current federal minimum wage, ensuring compliance with any applicable state or local minimum wage laws. Option D. Focus solely on the stated hourly cash wage and disregard any tips received by employees when assessing compliance with the federal minimum wage. The correct answer is B. Verify that the cash wage paid to all employees meets or exceeds the current federal minimum wage. Explanation: this scenario is professionally challenging because it requires a nuanced understanding of how federal minimum wage laws interact with specific employment agreements and the potential for underpayment claims. The CPAU professional must not only be aware of the current federal minimum wage, but also understand its application in various contexts, including tipped employees, independent contractors, and employees working across different states with varying minimum wage laws. The core challenge lies in identifying situations where an employee's effective hourly rate falls below the legally mandated minimum, even if their stated wage appears to meet or exceed it. This requires careful review of pay stubs, time records, and the nature of the employment relationship. The correct approach involves a thorough review of all compensation components, including any tips, commissions, or bonuses, and comparing the total earnings against the hours worked to determine the effective hourly rate. This approach is correct because it directly addresses the spirit and letter of federal minimum wage laws, which are designed to ensure a baseline standard of living for all covered employees. Specifically, under the Fair Labor Standards Act, FLSA, employers must pay at least the federal minimum wage for all hours worked. If an employee is tipped, the employer can take a tip credit, but the employee's cash wage plus tips must still equal at least the federal minimum wage. Failure to ensure this results in an underpayment. This approach also considers the possibility of employees working in jurisdictions with higher state or local minimum wages, which would supersede the federal rate. An incorrect approach would be to solely rely on the stated hourly cash wage without considering other forms of compensation or the potential for tip credits. This is incorrect because it ignores the FLSA requirement to consider total earnings against hours worked. It also fails to account for situations where an employee's tips, when combined with a reduced cash wage, do not meet the minimum wage threshold. Another incorrect approach would be to assume that if an employee is classified as an independent contractor, they are exempt from minimum wage laws. This is incorrect because misclassification of employees as independent contractors is a common tactic to avoid wage and hour obligations, including minimum wage requirements. A CPAU professional must be able to identify red flags for misclassification and assess whether the individual truly meets the criteria for independent contractor status under federal law. Finally, an incorrect approach would be to only consider the federal minimum wage and ignore any applicable state or local minimum wage laws. This is incorrect because federal law sets a floor, and employers must comply with the highest applicable minimum wage rate, whether federal, state, or local. The professional decision-making process for similar situations should begin with a clear understanding of the relevant federal, state, and local wage and hour laws. The CPAU professional should then gather all relevant documentation, including employment agreements, time records, and payroll data. A critical step is to analyze the employee's compensation structure, paying close attention to any tip credits, commissions, or other variable pay. The professional must then calculate the effective hourly rate for all hours worked and compare it to the applicable minimum wage. If potential underpayments are identified, the professional should investigate the reasons for the discrepancy and determine the appropriate course of action, which may include advising the employer on corrective measures or recommending further investigation. Question 15. The assessment process reveals that a restaurant owner has been applying a tip credit to the wages of all kitchen staff, including dishwashers and prep cooks, who occasionally receive a small share of tips from a communal tip pool. The owner believes that since these employees are part of the restaurant's service team and receive some pooled tips, they are eligible for the tip credit. Which of the following approaches best aligns with the regulatory framework for applying tip credits? Option A. Continue applying the tip credit to kitchen staff as long as their cash wage plus their share of pooled tips meets the full minimum wage, as they are considered part of the service team. Option B. Cease applying the tip credit to kitchen staff whose primary duties do not involve customarily and regularly receiving tips, and ensure their cash wage is at least the full minimum wage. Option C. Apply the tip credit to all kitchen staff, but increase their cash wage slightly to account for the potential variability in tip income. Option D. Inform all kitchen staff that they are now eligible for the tip credit, provided they agree to have it applied, and continue to pay them the reduced cash wage. The correct answer is A. Continue applying the tip credit to kitchen staff as long as their cash wage plus their share of pooled tips meets the full minimum wage, as they are considered part of the service team. Explanation. The assessment process reveals a common but complex challenge in managing labor costs: the improper application of the tip credit. This scenario is professionally challenging because it requires a nuanced understanding of specific regulatory definitions and employee classifications, rather than simple arithmetic. Employers often misinterpret which employees are eligible for a tip credit, leading to underpayments. Careful judgment is required to distinguish between employees who customarily and regularly receive tips and those who do not, and to ensure that the tip credit taken does not reduce the employee's cash wage below the applicable minimum wage after tips are accounted for. Correct approach involves meticulously reviewing employee job duties and tip earning patterns against the specific criteria outlined in the relevant regulations. This means accurately identifying tipped employees, ensuring they are informed of the tip credit provisions, and maintaining accurate records of tips received. The regulatory framework mandates that employers can only take a tip credit if the employee's cash wage plus tips equals at least the full minimum wage. Furthermore, the employer must ensure that the employee's reported tips, when added to the cash wage, meet the federal or state minimum wage. This approach is correct because it adheres strictly to the legal requirements designed to protect tipped employees from wage theft and ensures fair compensation. An incorrect approach would be to assume all employees in a customer-facing role are eligible for a tip credit. This fails to recognize the regulatory distinction between employees who, customarily and regularly, receive tips and those whose tip income is incidental. Another incorrect approach is to apply a blanket tip credit to all employees in a tipped occupation without verifying actual tip earnings or ensuring the cash wage plus tips meets the minimum wage. This violates the principle of ensuring the employee receives at least the full minimum wage. A further incorrect approach is to fail to inform employees about the tip credit, which is a mandatory disclosure requirement in many jurisdictions. This lack of transparency is an ethical and regulatory failure. Professionals should approach these situations by first consulting the specific regulations governing tip credits in their jurisdiction. They should then conduct a thorough audit of job descriptions, employee roles, and tip reporting procedures. Training for managers and employees on tip credit rules is crucial. When in doubt, it is always best to err on the side of caution and ensure full minimum wage is paid, or seek legal counsel to clarify complex situations. Question 16. Cost-benefit analysis shows that implementing a system that aggregates total hours worked by department rather than tracking individual employee time for a large hourly workforce could significantly reduce administrative overhead. As a certified professional authority on underpayments, CPAU, what is the most appropriate approach to wage and hour record-keeping in this context, considering the primary objective of regulatory compliance and employee protection? Option A. Utilize aggregated payroll data that shows total wages paid to each employee, assuming this implicitly reflects hours worked. Option B. Rely on employee self-reporting of total hours worked per pay period without any employer verification, assuming employees will accurately report their time. Option C. Implement a system that captures individual employee work hours with sufficient detail to satisfy regulatory requirements, even if it incurs higher administrative costs. Option D. Adopt the aggregated departmental hours tracking system, as the cost savings are substantial and the risk of significant underpayments is deemed low. The correct answer is C. Implement a system that captures individual employee work hours with sufficient detail to satisfy regulatory requirements, even if it incurs higher administrative costs. Explanation. This scenario is professionally challenging because it requires balancing the perceived efficiency of a streamlined record-keeping process against the absolute legal mandate for accurate and complete wage and hour records. The temptation to reduce administrative burden by relying on aggregated data, even if seemingly cost-effective, directly conflicts with the stringent requirements of wage and hour laws, which are designed to protect employee rights and ensure fair compensation. A CPAU professional must prioritize regulatory compliance and employee protection over potential cost savings. The correct approach involves implementing a system that captures individual employee work hours with sufficient detail to satisfy regulatory requirements. This means maintaining records that clearly indicate the total daily or weekly hours worked by each employee, as well as the basis on which wages are paid, e.g., hourly rate, piece rate. This approach is correct because it directly adheres to the fundamental principles of wage and hour record-keeping mandated by relevant regulations, such as the Fair Labor Standards Act, FLSA, in the U.S., which requires employers to keep accurate records of wages paid and hours worked. Failure to maintain such records can lead to significant penalties, back pay liabilities, and reputational damage. An incorrect approach that relies solely on aggregated payroll data without individual time tracking is professionally unacceptable. This fails to meet the regulatory requirement for specific documentation of hours worked by each employee. Such a system creates a significant risk of underpayment if, for example, employees work overtime that is not accurately captured, or if different pay rates apply to different tasks within a pay period. This approach demonstrates a disregard for the legal obligations of an employer and a failure to protect employee rights, potentially leading to violations of wage and hour laws. Another incorrect approach that involves relying on employee self-reporting without any verification or oversight is also professionally unacceptable. While it might seem to reduce administrative costs, it lacks the necessary controls to ensure accuracy and prevent errors or intentional misrepresentation. Wage and hour laws require employers to maintain accurate records, and this approach places the burden of accuracy solely on the employee without employer verification, which is insufficient to meet the employer's legal responsibility. The professional decision-making process for similar situations should involve a thorough understanding of applicable wage and hour laws and regulations. Professionals must conduct a risk assessment that prioritizes compliance and employee protection. This involves evaluating proposed record-keeping systems against specific legal requirements, not just perceived cost benefits. When in doubt, consulting with legal counsel specializing in labor and employment law is crucial to ensure that any record-keeping practices are fully compliant and mitigate potential liabilities. The ultimate goal is to establish and maintain a system that is both legally sound and ethically responsible. Question 17. System analysis indicates a recurring anomaly in the payroll data for a specific employee, flagging a potential underpayment in their most recent pay cycle. The system alert is generic and does not specify the exact cause. The payroll administrator must decide on the immediate course of action to address this flag. Option A. Dismiss the alert as a minor system glitch, given the employee's generally consistent pay history, and wait to see if the anomaly recurs in the next pay cycle. Option B. Focus only on the gross pay calculation in the system report and adjust that figure to match the expected net pay without examining the underlying input data. Option C. Immediately issue a manual adjustment to the employee's pay for the estimated amount of the underpayment, assuming a common error type, and then investigate the cause later. Option D. Initiate a detailed review of the employee's timekeeping records, approved overtime, any applicable shift differentials or bonuses, and all deductions and withholdings for the pay period in question, cross-referencing these with the employee's contract and relevant wage and hour regulations to identify the root cause of the underpayment. The correct answer is D. Initiate a detailed review of the employee's timekeeping records, approved overtime, any applicable shift differentials or bonuses, and all deductions and withholdings for the pay period in question, cross-referencing these with the employee's contract and relevant wage and hour regulations to identify the root cause of the underpayment. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of how to interpret potentially conflicting data points within a payroll system, rather than a simple calculation. The challenge lies in identifying the root cause of an underpayment anomaly when multiple factors could be contributing, and the system's automated flags might not capture the full context. Careful judgment is required to move beyond surface-level alerts and conduct a thorough, compliant investigation. The correct approach involves a systematic review of all relevant payroll inputs and outputs for the affected employee S and the specific pay period in question. This includes examining timekeeping records, approved overtime, shift differentials, bonus payouts, deductions, tax withholdings, and any system-generated adjustments. The goal is to cross-reference these data points against the employee's contract, company policy, and applicable wage and hour laws to pinpoint the exact discrepancy. This methodical, evidence-based investigation is mandated by the principles of accurate payroll processing and compliance, ensuring that employees are paid correctly and that the employer adheres to legal obligations, thereby preventing potential penalties and maintaining employee trust. An incorrect approach that focuses solely on the system's initial alert without further investigation fails to address the underlying cause. This is a regulatory failure because it bypasses the due diligence required to confirm and rectify an underpayment, potentially leaving the employee shortchanged and the employer in violation of wage laws. Another incorrect approach that involves making a quick, unsubstantiated adjustment based on assumptions about the cause is also professionally unacceptable. This is an ethical and regulatory failure as it risks compounding errors, potentially leading to overpayments or further underpayments, and demonstrates a lack of due diligence and adherence to established payroll procedures. It undermines the integrity of the payroll system and the employer's commitment to accurate compensation. A third incorrect approach that involves ignoring the alert due to perceived low volume or infrequent occurrence is a significant regulatory and ethical lapse. All underpayments, regardless of frequency or amount, require investigation and correction to ensure compliance with wage laws and to uphold the employer's responsibility to pay employees accurately. The professional decision-making process for similar situations should involve 1. acknowledging and documenting the system alert. 2. Initiating a comprehensive review of all relevant payroll data for the affected period and employee. 3. Cross-referencing findings with employment agreements, company policies, and statutory requirements. 4. Identifying the precise cause of the underpayment. 5. Implementing a corrective action plan, including back pay and any applicable interest or penalties, in accordance with regulatory guidelines. 6. Documenting the entire process and resolution. Question 18. Governance review demonstrates that a significant number of underpayment cases processed by the authority have involved the application of deductions. To optimize the process and ensure consistent application of these deductions, the authority is considering different approaches. Which approach best aligns with the principles of uniform deductions as defined by the regulatory framework governing the Certified Professional Authority on Underpayments CPAU exam? Option A. Allowing deductions based primarily on the payer's stated intent and justification for the expense, without requiring detailed verification against specific regulatory allowances. Option B. A systematic review of each potential deduction against the explicit criteria and conditions for uniform deductions as stipulated in the CPAU regulatory framework, ensuring proper documentation and adherence to any limitations. Option C. Implementing a standardized, fixed percentage deduction across all underpayment cases to expedite processing, irrespective of the specific nature of the underpayment or the expenses incurred. Option D. Continuing to apply deductions based on historical processing practices, assuming that past methods remain compliant with current regulations. The correct answer is B. A systematic review of each potential deduction against the explicit criteria and conditions for uniform deductions as stipulated in the CPAU regulatory framework, ensuring proper documentation and adherence to any limitations. Explanation. This scenario is professionally challenging because it requires a nuanced understanding of how to apply the principles of uniform deductions within the specific regulatory framework of the Certified Professional Authority on Underpayments CPAU exam, which is assumed to be based on a defined, singular jurisdiction for this exercise. The core challenge lies in identifying and implementing deductions that are both permissible under the governing regulations and accurately reflect the underlying economic reality of the underpayment, without creating undue administrative burden or misrepresenting financial positions. Careful judgment is required to distinguish between legitimate deductions and those that might be disallowed or misinterpreted, potentially leading to incorrect underpayment calculations and subsequent penalties or disputes. The correct approach involves a systematic review of all potential deductions against the explicit criteria outlined in the CPAU regulatory framework for uniform deductions. This means verifying that each deduction claim directly relates to the underpayment, is supported by appropriate documentation, and adheres to any specific limitations or conditions set forth in the regulations. This approach is correct because it prioritizes compliance with the established rules, ensuring that deductions are applied consistently and fairly, thereby upholding the integrity of the underpayment resolution process. It aligns with the ethical obligation of a CPAU professional to act with diligence and accuracy, minimizing the risk of errors that could harm either the payer or the payee, and adhering strictly to the defined jurisdiction's laws. An incorrect approach that focuses solely on the payer's stated intent without verifying against regulatory requirements is professionally unacceptable. This fails to acknowledge that regulatory compliance is paramount, and subjective intent does not override established rules. Such an approach risks allowing deductions that are not permitted, leading to an inaccurate underpayment calculation and potential regulatory sanctions. Another incorrect approach that prioritizes expediency by applying a blanket percentage deduction without individual assessment of each component of the underpayment is also professionally flawed. This method bypasses the detailed scrutiny required by the regulations, which often mandate specific criteria for each type of deduction. This lack of granular analysis can lead to both overdeduction and underdeduction, undermining the fairness and accuracy of the resolution. A further incorrect approach that relies on historical practices without reevaluating their current regulatory validity is problematic. Regulations can change, and past practices may no longer be compliant. A professional must ensure that all deductions are aligned with the current legal and regulatory landscape, not just historical precedent. The professional decision-making process for similar situations should involve a structured, evidence-based methodology. First, thoroughly understand the specific underpayment and the nature of the claims for deductions. Second, consult the relevant regulatory framework for uniform deductions, identifying all permissible categories and their associated conditions. Third, meticulously review the documentation supporting each claimed deduction, cross-referencing it against the regulatory requirements. Fourth, apply deductions only where they meet all stipulated criteria, documenting the rationale for each allowance or disallowance. Finally, ensure the overall calculation is transparent, defensible, and fully compliant with the governing jurisdiction's laws. Question 19. What factors determine the specific state overtime rules that must be applied to an employee's compensation beyond the general federal 40-hour workweek threshold? Option A, the employee's annual salary and the overtime policies of neighboring states. Option B, the employee's job title and the overtime rules of the state where the employer's payroll is processed. Option C, the employer's headquarters location and the general overtime provisions outlined in the Fair Labor Standards Act. Option D, the employee's primary work location and the specific exemptions defined by that state's labor laws for their job classification and duties. The correct answer is D, the employee's primary work location and the specific exemptions defined by that state's labor laws for their job classification and duties. Explanation. This scenario is professionally challenging because accurately determining state overtime eligibility and calculation requires a nuanced understanding of varying state laws, which often differ significantly from federal standards and from each other. Professionals must navigate a complex web of exemptions, thresholds, and specific definitions of hours worked that can lead to substantial underpayments if misapplied. The risk of noncompliance, leading to back pay, penalties, and reputational damage, necessitates meticulous attention to detail and a robust understanding of the applicable regulatory framework. The correct approach involves a thorough analysis of the specific state's labor laws governing overtime. This includes identifying the applicable overtime threshold, which may be different from the federal 40-hour week, understanding any state-specific exemptions for certain job classifications or industries, and correctly interpreting the definition of compensable hours worked under that state's regulations. This approach is correct because it directly addresses the legal mandate for overtime pay as defined by the relevant state authority, ensuring compliance and preventing underpayments. Adhering to the specific state's regulatory framework is paramount for accurate compliance and ethical practice. An incorrect approach would be to solely rely on federal overtime rules, Fair Labor Standards Act (FLSA), without considering state-specific variations. This is a regulatory failure because federal law often sets a minimum standard, and states are free to enact more protective provisions. Applying only federal rules would lead to underpayments in states with lower overtime thresholds or broader coverage than the FLSA. Another incorrect approach is to assume that overtime rules are uniform across all states, leading to the application of one state's rules to employees in another state. This is a significant regulatory and ethical failure, as it demonstrates a lack of due diligence in understanding and applying the correct jurisdictional laws, directly resulting in non-compliance and potential underpayments. A third incorrect approach is to only consider the employee's job title for exemption status without examining the specific duties performed against the state's exemption criteria. This is a regulatory failure because state laws typically define exemptions based on the nature of the work, not just the title, and misclassifying an employee based solely on title can lead to improper denial of overtime pay. Professional decision-making in such situations requires a systematic process. First, identify the state S where the employee performs work. Second, research the specific overtime laws for each identified state. Third, analyze the employee's job duties and compensation structure against the relevant state's overtime eligibility criteria and exemption definitions. Fourth, apply the state-specific rules to calculate any owed overtime. Finally, maintain thorough documentation of the analysis and calculations to demonstrate compliance. Question 20. Examination of the data shows that a client's employee, a graphic designer, claims they regularly spend an average of 2 hours per week outside of their scheduled work hours preparing for client meetings by reviewing project briefs, researching design trends, and organizing digital assets. The employer's policy states that only time spent actively working on client projects during scheduled hours is compensated. The employee argues this preparation is essential for effective client presentations and project success. Based on U.S. federal wage and hour regulations, what is the most appropriate determination regarding the compensability of this unpaid preparation time? Option A. The preparation time is likely compensable because it is an integral and indispensable part of the employee's principal activities as a graphic designer, performed for the employer's benefit and under their control, even if not explicitly scheduled. Option B. The preparation time is not compensable because the employer's policy explicitly excludes it, and employees are expected to manage their professional development and pre-meeting tasks within their designated work hours. Option C. The preparation time is not compensable because the employee voluntarily undertook these activities outside of their scheduled work hours, and there is no evidence of employer coercion or requirement to perform them. Option D. The preparation time is only partially compensable, specifically for the time spent reviewing project briefs, as this is the only activity directly tied to immediate client deliverables. The correct answer is A. The preparation time is likely compensable because it is an integral and indispensable part of the employee's principal activities as a graphic designer, performed for the employer's benefit and under their control, even if not explicitly scheduled. Explanation: this scenario is professionally challenging because it requires the Certified Professional Authority on Underpayments CPAU to interpret and apply the specific regulations governing unpaid preparation time within the defined jurisdiction, which is assumed to be the United States for the purpose of this CPAU exam. The core difficulty lies in distinguishing between compensable and non-compensable preparation activities, especially when the lines can be blurred by the nature of the work and employer policies. Careful judgment is required to ensure compliance with federal and state wage and hour laws, such as the Fair Labor Standards Act, FLSA, and to uphold ethical obligations to both employees and employers. The correct approach involves a thorough review of the employee's described activities against the established legal tests for compensable work time. This includes assessing whether the preparation activities are an integral and indispensable part of the principal activities for which the employee is employed, and whether they are performed for the employer's benefit and under the employer's control. Specifically, if the preparation time is directly related to the employee's core job duties and is necessary for them to perform their primary tasks effectively, it is generally considered compensable. This aligns with the FLSA broad definition of workweek and the principle that employees must be paid for all hours worked. The CPAU role is to identify these compensable hours and ensure they are accurately recorded and paid, preventing underpayments. An incorrect approach would be to dismiss the employee's claim solely because the preparation activities were not explicitly part of their on-the-clock duties, or because the employer's policy did not mandate payment for such time. This fails to recognize that employer policies cannot override federal law. Another incorrect approach would be to assume that any preparation done outside of scheduled work hours is automatically non-compensable. This ignores the possibility that such activities, if integral to the job, are still considered hours worked under the FLSA. A third incorrect approach would be to apply a rigid, one-size-fits-all interpretation without considering the specific nature of the employee's role and the actual benefit derived by the employer from the preparation. This overlooks the nuanced application of wage and hour laws. The professional decision-making process for similar situations involves a systematic evaluation. 1. Understand the employee's claim and the specific activities in question. 2. Identify the relevant jurisdiction's wage and hour laws and any specific guidance on preparation time. 3. Analyze whether the preparation activities are an integral and indispensable part of the employee's principal activities. 4. Determine if the activities were performed for the employer's benefit and under the employer's control. 5. Consult relevant case law and administrative interpretations for similar situations. 6. Make a determination based on the totality of the circumstances and the legal standards, ensuring fairness and compliance.